A newly proposed rule could give your next credit score a major boost. The Biden administration unveiled a plan to prevent medical debt from dragging down your rating. If enacted, the policy would impact millions of people in the U.S., where an estimated 1 in 12 have outstanding medical debt. For more on this, let's bring in CBS News senior consumer investigative correspondent Anna Werner. Anna, good to see you. So, why is the Biden administration focusing on medical debt, and what makes it different from other types of debt when you're looking at someone's ability to pay back a loan?
Yeah, good morning, Vlad. Well, the problem with medical debt is that it impacts some people's credit scores in ways that experts say are unfair. Because what really happens with a lot of people is they have medical debt that is hard to avoid, and then it winds up going into collections. And oftentimes these are for large amounts of money. Sometimes people don't even know that they have medical debt that's out there, and while it winds up in collections. And then what happens is it can impact a person's credit scores and their ability to get loans. For example, mortgage loans. Your interest rates might be higher on a mortgage loan, on a car loan, even on getting a lease for an apartment, for example. So what really happens to these people is sometimes they find out that this is a problem, and then they are denied certain types of loans. In the meantime, government studies show that medical debt is not a great predictor for whether people will actually pay back on the other things in life, like a car loan or a mortgage payment.
I think for a lot of people, their credit score is a complete mystery. We know that it takes forever to work our way up to a high credit score, and then one missed payment or a late payment, and it can torpedo a good chunk of all the years of sort of long work and paying diligently. So, which brings me to my question. Outstanding debt, what sort of factor or role does it play in the final number?
Well, it can really hurt your credit score, right? I mean, these are the things that creditors are looking at. Do you pay your bills? Do you pay on time? Do you have bills that went unpaid? So when collections agencies file and say, hey, Ms. Smith didn't pay a large outstanding medical debt, that's going to impact the credit scores. But what the studies have shown is, federal government studies have shown, that that really is not a great predictor for whether someone is actually going to pay back on, credit cards or car loans or mortgage loans. So it is definitely, you want to keep an eye on your credit score. And just a reminder to people that you can go and monitor your credit score. You're entitled to a free credit report from these agencies every year. So go and get your free credit reports. I certainly have. And once you get used to reading them, they're not that hard to read.
So credit scores also play a large role in granting mortgages for potential home buyers, as you know this, Anna. Talk to us about the impact this could have on reducing those barriers for home ownership.
So if you have debts, like medical debts that are showing up on your credit report and they are above $500, that can really affect the interest rate that you might pay on a mortgage loan. It could even affect whether you can actually even get a mortgage loan. These debts show up, they look like bad debt, and therefore the interest rate from a mortgage loan company when they're factoring in your credit score is going to be higher. Some people can't even get those mortgage loans. They may be denied mortgage loans or car loans as a result of this medical debt.
So, you can't help but to talk about racial inequities when you talk about health care. And I imagine that something like this could have a huge impact on racial minorities who find themselves disproportionately bearing the weight of health care debt.
Right. And what the experts say, Anne-Marie, is that these problems disproportionately impact people in the South and people in low-income communities. So the administration is saying that this does have a racial component to it. Communities of color are disproportionately impacted here. And obviously, some people who are already struggling just to get that mortgage loan, to get that first house, a debt like this could be prohibitive for them. So one thing to keep in mind, however, about all of this is that this is not a done deal yet. So there's going to be public comment for the next few months. Be sure to offer your public comment to the administration. And then they're going to come up with a final proposed rule. However, let's not forget, the next thing coming up is the election. And depending on who wins the election, these rules may go forward or not.
Anna Werner, thank you so much.